Hi, it's Professor Mike, and this is Chapter 15, Audit Sampling for Tested Controls and Substantive Tested Transactions. This is going to get a bit wonky, so bear with me. Your quiz will not be extensive on calculations of samples, but more the concept of sampling, what it means, what the attributes that you're sampling for, what an error is, things like that. So I want you to focus more on the concepts and less on the mechanics of sampling. One of the challenges mentally that a lot of auditors, and I know I had this too, um, had when we were doing samples is if you've got a huge population of transactions and you're only sampling a couple hundred, how could that possibly be representative? There's a bias towards wanting to get a coverage, to get a certain percentage of the information. And yet, you need to realize, and you do through your Business 90 statistics classes, that the sample can be extremely effective at providing evidence, and that sampling is based in mathematical science. And the AICPA has an entire guide on sampling. And as long as you follow the concepts of that guide, which all the accounting firms really do, then you're going to have sufficient defensible evidence. It doesn't mean that your sampling is going to be perfect. It doesn't mean that you're always going to uncover errors, but it does mean that you have taken the appropriate steps under the auditing standards to attempt to uncover evidence of errors or fraud. And that's what's important. You're not trying for perfection again. You are trying to do what the auditing standards require of you to find potential misstatements or evidence of fraud. So the ultimately you want a representative sample. You want something whose characteristics reflect the overall population. So you don't want outliers. You don't want special transactions, things like that. Those should not be part of a sample. The best samples are of relatively homogeneous items. So you never know whether a sample is representative, but you can decrease the likelihood that that it's not representative by your design of the sampling, how you select, and how you evaluate the results. Um, there's two types of error. This is important. There's sampling risk, which is the risk that you reach an incorrect conclusion because your sample is not representative um, of the population. So, you know, you pick items, they all turn out to be perfect, and yet the population has a lot of errors in it. Even though you did the right sample calculations, everything like that, there is a risk of the sampling not being accurate. Non-sampling risk is more you. It's um, it's you reach an incorrect conclusion for anything related to not related to sampling risk, which means that you made an error in selecting, you made an error in assessing exceptions, you made some type of judgment error, or you overrode the sampling process. So that's more of you reached an incorrect conclusion because you did something wrong in the application of sampling. So statistical versus non-statistical sampling. Both are appropriate for auditing standards. Both are acceptable. Um, Both involve planning, selecting the sample, and performing the test. Um, but non-statistical sampling tends to give you larger sample sizes because you don't have the validity of a rigorous statistical model to be able to support your conclusions. Therefore, you have to do more tests. It's as simple as that. Why would you use non-statistical sampling? Because it's easier and If you expect some errors, then non-statistical sampling with a larger population may be a better solution for you. If you don't expect errors and you have a relatively homogeneous population and you have the tools to be able to do statistical sampling, which are pretty widely available now because of technology, then you will apply statistical sample. The You can use probabilistic versus non-probabilistic. This is where I'm starting to I'll start to let you look at the text and determine how much of this you guys want to go into for purposes of the CPA exam. But I'm going to start to skim some of these more detailed terms because they're more about the calculation and the definitions of sampling and less about the overall concepts. So you can use either statistical or non-statistical. When you're using statistical, you must use probabilistic. You can use probabilistic for non-statistical, but you can't use a non-probabilistic sample using statistical methods, right? So again, this is getting into the weeds of using calculations and evaluate. But probabilistic is simple random selection or systematic selection, right? Simple random is you take a random number table or you take a random number item list in Excel and that's it, right? Systematic is you pick an interval and you stick to that interval. There's no judgment involved. And then you can also use probability proportional to size. This creates the situation where if you have large items, they're more likely to be selected, which actually gives you, better evidence if you're thinking about things like coverage and stuff. So all these things are appropriate for statistical. For non-probabilistic, again, things that you can't do for statistical, haphazard, you just choose, right? Or you select a block of items, all the invoices on March 30th, for example. Those are non-probabilistic, so you're not giving everything equal weight, and therefore they're not appropriate for statistical sampling. You can also sample for an exception rate, which is what you're doing for tests of controls. So you really want to understand what the limits are, your tolerable error limits, and then figure out what the error rate is in a population. So the error rate can affect controls, right? Are controls operating effectively within a 5% error rate? Okay, then then I can reduce my test work if I think a 5% error rate is acceptable. If I'm looking at tests of transactions, I may decide that a 3% error rate is tolerable, and therefore I'll test the transactions, and if my results yield an error rate less than 3%, I'm happy. So what you're looking for in a sample of controls is, or in data, is either deviations from the established controls, and defining what the deviation is extremely important. So when we get to how you're implementing a test of controls, it's really going to be about what is the attribute you're testing for, and then what constitutes an error. And similarly, monetary misstatements in transaction accounts and then monetary misstatements in account balance details are the things that you're going to be testing for from an exception standpoint, and those will give you rates of error, right? So non-statistical sampling, again, same approach as statistical sampling. You plan it, you select the sample, you perform the audit procedures, and you evaluate the results. There's 14 different steps that you do to to conduct this type of sample. Um, I'm going to go through a few of them. Number 3, define the attributes and exception conditions. What are you testing for specifically? If it's a control, let's say the control is that uh, someone reviews and initials to ensure that a shipping document item listing matches the customer invoice and matches the customer purchase order. Okay, so the control is that the person doing the review actually initials, whether electronically or physically. Well, what if they don't initial? What if they're on vacation and they aren't there to initial? What if somebody else initials for them? These are all potential exceptions. So a better definition may be that there's a review conducted by an appropriate level of personnel, define who the appropriate level is, and document the type of evidence that it may be. There may be check marks, there may be initials, there may be other forms of evidence of review. The key is that there is a review and a matching and some documentation that that review and the matching took place. If you define things too narrowly, you will get exceptions which may not be true exceptions. But the minute that you find an exception and you try to explain it away, that exposes you to second guessing in a situation where you have sampling risk, right? That you do, in fact, reach an inappropriate conclusion. So this is why definition of attributes and exception conditions is extremely important. This goes for balances as well as controls. Um, so the 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 other thing is like evaluating the results. You will try to, when you find some exceptions, you may try to say that they were isolated incidents and other things. This is where you can also get into trouble. So what you need to be able to make sure is that you can accurately defend a statement that something's an isolated incident and is not consistent with the general population. How do you do that? You probably have to do more test work or increase your sample size. So there's a bunch of terms here. I'm not going to go through them all, but you can review them in the textbook. And there are specific guidelines on acceptable risk and the kind of control risk that you're assessing. So when you're looking at the audit risk model, come back to the audit risk model, and you say the lowest assessed control risk, that reduces your substantive procedures, right? Go back to the math. So the more the lower our assessed control risk, the more work that we're going to need to do on internal controls and testing controls, which may or may not mean higher sample sizes, but it does mean we've got to make sure that we are within our acceptable risk on our control test work in order to do our planned amount of substantive procedures. So you can see that this all ties back to the audit risk model. And then the non-statistical sampling tested transactions, again, same concept. When you're assessing risk as high, then you're going to do less test work. If you're assessing risk as low, you're going to do a lot more test work. Okay, so you guys can read these individually and go through them in your PDFs. And if you have questions, I'm happy to answer them. But the sample sizes are all based on a couple different things. If you're dealing with controls, they're based on a series of tables that are in the AICPA's Guide to Statistical Sampling, and we'll go through that in the next chapter. If you're basing it on balances, it's going to be based on a number of different factors, including your other procedures that you're performing and how much reliance you have on those other procedures, and then the dollar size of the population and certain elements of the population. Okay, so again, this is the audit sampling steps. These are the 14 steps. They're consistent whether you do them statistically or non-statistically, but the approach on statistical versus non-statistical is entirely based on how you select the items, right, and what kind of conclusions you can draw, and the reliability of those conclusions, and the rigor that's associated with a statistical sample size. So in statistical sampling, we'll use that for test of controls, test of transactions, test of balances. What we will reach is a conclusion either on error rate of attributes or dollar error rate of a population. And so it is a statistically valid conclusion. Now, you're going to, when you find an error, you're going to have the actual error from the sample, and then you're going to have statistically projected error. If it's a dollar amount, the client is probably not going to want to book an adjustment for the dollar amount of statistically projected error because they don't know what's wrong. Whose invoice are you going to assign that to if you're testing accounts receivable, right? You can't. So the subledger is not going to equal the general ledger, and that's going to be a challenge for the client. So they're going to want to go back and understand where errors could have occurred, or they're going to want you to determine that it's an isolated incident. But this is where you get into the situation where you probably have to do more audit work because the client's going to say, look, I'm not going to book a projected error amount. I'm only going to book the hard errors. And the audit partner and the concurring audit partner are probably not going to be able to live with a conclusion that's above their acceptable risk level. So, but when you're looking at attributes and controls, some of the same things apply, right? You can't, if you find errors in internal controls and the attributes you're testing for internal controls, you can't reduce your substantive work if your error rate in the internal controls test work is higher than what you had projected in designing your substantive work. You're going to have to do more procedures. So, the sample size for a non-statistical sample is going to be larger, and the tables that you're able to use for the statistical samples are determined because they are rigorous and apply specific statistical concepts and selection methodologies. When you go into non-statistical sampling, the selection methodology potentially biases the information, and therefore you have to do larger sample sizes. Okay. The exception rate and sample size is completely unique, and this is a calculation of the different numbers of exceptions. And from a controls perspective, you don't necessarily want to assume that everything's perfect. So you don't want to say that we're going to have 0 exceptions because the minute you have one exception, your test blows up. You're better off having an acceptable error rate based on historical information, based on where the client is, based on what is uh, the tolerable error rate that you're willing to live with. Um, that gives you room in case there are a few exceptions for your test to still be statistically valid. Okay. Um, so you're going to specify your risk of over reliance, right? Um, so this is basically, you know, what what's your risk if you decide that controls are working and they're really not. And then you determine your sample size, um, and you're using tables developed by the AICPA to determine the sample size. You select the sample, but you must use probabilistic methods, and then you uh, do the actual sample and you generalize that to the population. So you calculate the exception rate and you use statistical formulas. Again, this is pretty wonky. I don't expect you to know all these different PA exam. Also, I want you to understand and be comfortable with the fact that sampling is okay. You don't need to audit 100% assurance and reasonable. This is why you took Business 90. This is why you take quantitative business analysis, because with limited information, you can project to populations. And that's, that's important not only in auditing, but it's also important in cohort analysis for uh, business, uh, business tasks, advertising, things like that. So these are very relevant concepts to understand just outside of the accounting. So we'll talk more about sample populations in Chapter 16.